Hey, happy Wednesday. Welcome to Real Estate Chat with the Burnett's. Well, with one of them anyway. Marty's out today, so he just got me. But we have Verlon with us, which is one of our eXp agents in the office. And he is a veteran, past veteran, and focuses a lot of his real estate business on veterans, which is really has some unique things, and brings some unique characteristics to the table. And so he has a guest, Tony, with us as well to talk a little bit more about that. And how are you doing today, bud?
I'm doing wonderful. Thank you.
Awesome.
Cool. Hey, can you hear me?
Yes, I had lost you for a second there. I got you now.
Okay. All right. We're good. All right. So who do you got with us, Verlon?
So I, as you said, I focus primarily on my veterans, trying to make sure they get into ownership, get out of some of them high rental places that they're living in. And I have with us today Tony, and I don't want to jack up his last name like I always do, so I'll let him tell you his last name. But he is my go-to guy when it comes to finances involving VA loans. So I'll let him tell you a little bit about himself, and then I'm gonna hit him with a couple of hard questions that I always get hit with from my veterans, and then we'll run with it from there.
Sure. Verlon, thank you. My name is Tony Fragale.
Okay. The past couple of years, but
what's that? Oh, sorry.
No, go ahead. I'm sorry.
Yeah, I'm sorry. Okay. Anyway, yeah, I'm with Mutual of Omaha Mortgage. I have been in the mortgage industry and originating loans for 22 years this year. It's basically my career at this point, safe to say. I have lived in the greater Nashville area this entire time. I am licensed around the country, but I do try to do my primary focus in this area here. And with its, short commute to the Clarksville area, VA has been a very prevalent part of my career through our company and just through basically being this close to, a major Army base, which has expanded throughout the country, like I said. And, I have veterans all around the country that I work with at this point in time. So.
Awesome. Thank you so much, Tony. Well, the very first question that I always get hit with the majority of the time is, can you use your VA loan more than once?
That is the most common question, or one of, and that is correct. A lot of veterans will wait till they either, they don't renew their contract or they retire to use their VA benefit. And that's a very big misconception, which is you can use it again. You can have more than one VA loan at a time. And it's just, when you are in the military, your primary focus is your job and your career in the military. Your primary focus is in understanding the VA loan product. So those misconceptions start at every level for the veterans. And it's just, we need to kind of set the record straight with that. And yes, you can have it more than once. You can have more than one time, and you can use it more than once.
So I also get hit with, there is a cap on your VA loan. Correct. Can you shed some light on that?
Yeah. So when you're using it for the first time, or if you don't have a current active VA loan, there is no cap. There never really was a cap. At some point, you would have been required to put money down based on your entitlement percentages. Now, if it's a first time use, or if you've sold a home and you don't have an active VA loan, there is no maximum loan amount for the VA. Where a cap comes into play is when you're using bonus entitlement, which is what I was referring to. When you have a second VA loan at the same time, you then have to adhere to the county loan limits plus a 25%, there's a 25% of the overage from the county loan limit to the finance amount you typically have to put down. There is a calculation that we run. That's not an exact number, but that's a pretty close way to determine it. But I have a calculator. What I would do is pull a veteran's entitlement. I would input that into the county loan limits based on the purchase price they're looking at, and it would tell me exactly how much they need to put down. But for number purposes, it's typically about 25% over the county loan limit.
Nice. And then the other one is, how can veterans get a copy of their certificate of eligibility?
call me.
Yes, that's talking about.
There are a couple ways to do it. They can do it themselves and go through the VA portal that they have access to, or they can call me. If it is if it's online, it takes me about 90 seconds to do it. I need a social security number and a year of birth. We're not pulling credit, and I always reiterate that to our veterans. This is not a credit pool. I'm just logging into the VA portal. I'm pulling your eligibility letter. If it is not available online, which typically can happen for older veterans or somebody who was in the Guard and it was activated, or in the reserves that was activated, that eligibility letter may not be available online. At that point, I'll need a DD-214 or an NGB 2223, things like that, to have their service record or their, it shows their activity. And then I can submit that in. It can take anywhere from 72 hours to maybe a week, depending on, how old the veteran is or, where they were at. And we'll get that back by email, and then I'll be able to get the eligibility letter at that point.
And I tell my veterans all the time, but I want them to hear it from you. You do not have to be retired in order to use your VA loan. A lot of guys think, well, I didn't retire, so I don't have a VA eligibility, or I don't have the options of using a VA loan.
That is correct. 2 years service for any active service member is eligible for VA if you were activated, or if you were, sent overseas or deployed. Sorry, my words are not doing well today. 90 days, you are then eligible for the VA entitlement, and that goes along with National Guard and reservists. There is a point system for that. It's 6 years in the in the Guard and reserves, and you have to meet the point system. However, if you were even activated, if you were deployed at 90 days, then you will get your eligibility. Even if it's domestically, I believe it's called Title 32, which is, a domestic activation. It's the same, that requirement is the same 90 days. And again, if you're not sure, we can get the information, the service record, the forms, we can upload them, send them to the VA. And again, within a week, week and a half, we can determine whether or not the VA will warrant the eligibility. And I will tell you, they will look at some of these case by case. If it's super close, you can make a case sometimes that they'll still give the eligibility.
Nice. Awesome. Well, before we jump off, because I
got a question.
I'm sorry,
Tony. So there's lots of different loan programs out there. So if I'm a buyer and I'm looking at talking to the lenders, and there's the FHA, there's conventional, there's all these other things, there's VA. What is so different about obviously you have to be a veteran,
yes.
But what is different about that VA loan compared to some of the other?
That's an excellent question. And I actually had this conversation with someone today who had spoken to someone, and they were a veteran, and they had spoken to another lender, and they were recommending them going FHA, and they told them that the rate was lower, which is really not the case. But the biggest advantage of FHA, and I tell any veteran, it's hands down the best loan in the country. It is a minimal down payment or a zero down payment. When I say minimal, you have the option of putting money down. Regardless, there is no mortgage insurance on a loan. So if you compare apples to apples, which let's say a conventional loan, which for a first-time home buyer is a minimum of 3% down, or an FHA loan, which is a minimum of 3.5% down, you have on a conventional loan, you still have mortgage insurance that continues for upwards of 7, 8, 9 years, depending on the loan to value. FHA, if you don't put a certain amount of money down, the mortgage insurance is permanent. Plus, the FHA charges an upfront fee of 1.75%. So you have a fee charged to you plus the mortgage insurance. With VA, there is a funding fee. It is an upfront finance charge, financed into the loan. It goes directly to the VA. It's 2.3% for a first-time use, 3.6% afterwards. If you have a service-connected disability and it's 10%, which is the minimum, though disability rating is below 10%, you forfeit the funding fee. However, if you are charged the funding fee, it's a one-time fee financed in, but there is no mortgage insurance. So if you do the math, you come out way ahead by that one-time fee at the front end of your loan than paying a monthly fee month after month after month. So not only, a lot of the myth is with the VA loan, it's more expensive. It's not. It seems more expensive because of that front-end finance fee that the VA charges. All that is an insurance policy, because the VA is an insurer, they're not a lender. But you run the math 100 times out of 100, it's always going to come out to be a cheaper loan, and it's a fantastic loan.
What's an example of how much mortgage insurance cost per month for
So
somebody?
on VA, it's a fixed amount. It's 0.85%. It's what the MIP fee is. So you basically would take the amount divided over 12 by 0.85%, and you can calculate it that way. It's pretty expensive. So basically $85 for every $100,000 that you're financing. I mean, that's not the exact math, but if you want to kind of calculate in your head. Conventional loan is credit based. So a conventional loan could have a really low mortgage insurance premium if you have excellent credit and things like that. But again, it still continues month after month after month. So that number really adds up. But again, remember, an FHA or a VA loan requires no down payment. So, with a conventional loan, you're still putting 3% down. With a VA loan, you're not putting any money down. If you do choose to put 5% down on a VA loan, the funding fee goes from 2.3 or 3.6 all the way down to 1.65%. So for a service member who probably is selling a home, who, their next home, they're probably not going to just do 100% financing because they have money they've made from their current home. If they don't have that service connected disability, that funding fee is significantly reduced. So.
Well, that's great information for sure. So obviously, anybody that's looking to buy a home, if you are a veteran, it's definitely worth looking into. And everybody's situation is different, but it sounds like it has some really good potential there. So
it does.
Yeah. Awesome.
Great. Anything else? Anything else we'll share about the VA type stuff?
I think we hit all the key points, unless you have something else you want to add, Tony.
No, I mean, I think for purposes of today, that's, it's a lot of good information. We could get into this for hours on the technicalities and the things the VA loan offers. But I think for most people, the biggest questions are more than one-time use. Can I have more than one VA loan at a time? And that will really ease a lot of the veterans' minds on whether they want to not or go forward with using a VA loan.
Awesome. Well, I thank you so much, buddy, for coming on with us today. I think we can go ahead and wrap this up, Matt, unless you got a couple more questions.
No, that's it. So, Tony, thank you very much for Verlon. Great to see you again, as always, and appreciate y'all coming on and sharing that, and hope y'all have a good rest of the week.
All right. Sounds
good.
good.
As well.
Take care.